Hey everyone, welcome to the weekly review. We finally got a bounce yesterday and a 90 U vol, which is extremely bullish in the short term. Although we could potentially do a backtest and go a bit lower before we go higher, but that's kind of irrelevant. I'll get to that when we do the short term plan. Just want to begin with showing how much the dip was bought last week, and I'll go through a bunch of prints here. So this is the Europe, Middle East, and Asia ETF. Lots of sweeps here. A number three print, also sweep on Friday. In general, very bullish. Then we have Vong, Russell 1,000 growth. Many dip buys, number four print, number five print sweep. So quite a lot of dip buying. Then we have mid cap ETF. These ones are smaller, but still lots of deep buying here. We have VIG, multiple prints at the bottom, dividend appreciation ETF. VOMV, another Russell 1000 value, but from Vanguard. Lots of deep buying here and lots of sweeps. IGV with number three print on Friday, tech sector ETF. IVV with number one print on the close on Friday as well. Blue ones are market trades, so they appear in the volume. The orange ones are dark pool prints which don't appear in the volume. So for example, if you have 3 million shares, when you look at the volume on the chart, you will see a spike in volume if this is blue. If it's orange, you won't see it in the volume. So this is dark pool. Lots of deep buying as well. VO, VU as well, like dark pools at the bottom ticking it. SPY multiple accumulation ones as well. QQQ number 4 print and a few smaller ones that are not ranked as well, including on the close. And then on the other hand, we have bonds, which have been going down the entire week. But again, I find it extremely difficult to believe that this is actual selling. I think this is more likely accumulation, and I'll make a case for this here. First of all, for this, for there to be this amount of selling here, I think we would have seen a lot more accumulation here. So I don't see how this is selling. It's more accumulation, and we have this is long-term treasury for SPDR. We have Vanguard short-term treasury, same type of behavior here. Virtually no accumulation here, but a lot of activity at this point. This is Vanguard total international bond ETF, and this is accumulation at lows, multiple sweeps. Then we have the mortgage-backed securities MBB from iShares. Again, little to no accumulation here and a lot of activity here. Uh, this is Schwab aggregate bond ETF. This was definitely selling, but we have a number one print here, and it was a sweep, and we haven't gone down below this level, or we tried to go down but recovered. Vanguard intermediate term treasury ETF, again, lots of activity, holding around this level. So if there was this amount of selling happening, I don't think price would have resisted. Like print after print after print after print sweeps, high ranked trades after high ranked trades. I don't think we would have already broken down. So it's very unlikely that this is selling. This is more accumulation. Schwab short-term treasury, uh, GOVT iShares Treasury Bond ETF, number one print, lots and lots of dark pool prints here. Again, little to no accumulation. And finally, to TLT, we have lots of accumulations here and uh, a bit of selling in this area, especially if I add more prints, like let's do full 50. Take a few seconds to load. Come on, you can do it. So a bit of selling here for sure, but short-term selling, like this accumulation here, I think is staying. And look what happened when we try to break the horizontal level. Like immediate green candle, we have an inside candle on Friday, and basically it's holding this level. And again, I don't think we would have already broken down if this was real selling and not accumulation. And given the macro context, with potential for recession, with tariffs coming up, even though there is potential for inflation spiking, mm, there's more fear of recession. And the path for both the bearish path and the bullish path require treasury yields to come down. So if we have continuation here and we go higher, and this actually becomes a bull market leg, it will do so because treasury yields come down. Like unless that happens, then we should be seeing a lower high here and in the 570, 580 area, and that's about it. On top of this, economic data on Friday came in really bad, especially for inflation expectation, sure, but it's more about the consumer expectation, consumer sentiment, which is at the same, almost close to the same levels we were at the 2022 lows in June. And consumer expectations, and there's another one, current conditions, this one. Same, came in very low. So the market liked that, and we rally in spite of the negative print because it now likely expects some Fed cuts. So consumer expectation coming in low hints at real weakness, hints at potentially yields coming down, and the Fed cutting more than expected. That's why, in spite of the very negative print that is recessionary, we had a 90 U vol because the market likes it. Now, this being said, short term, short term we should expect a bounce, but looking at some, this was a 90 U vol. Let's look back at a few 90 U vols, and I think the closest one we have right here is this one, which didn't come exactly off the bottom, but as a follow up to a reversal. And I think we have a very similar setup. And I think there's two kind of main in which we go up, we pull back, try to make new lows, fail, and then we do a bigger rally. And there's basically two scenarios I'm thinking of that can play out very quickly. So first of all, we need to know when OPEX is. And OPEX is, this is not Wednesday, this is basically OPEX. The way I'm thinking about it is we do first scenario is we actually pull back. We hover around lows in the short term, but eventually succeed and start a move up probably around Wednesday. So basically we remain weak until Wednesday. I can close this, we don't need it anymore. In spite of the negative, the 90 U vol, we can definitely pull back. And a bullish pullback would be on this AV up. So we go back a bit, the dip gets bought again, and we go up. And this would mean go up relatively quickly to the 575, 580 area, most likely around here. So this would be Wednesday. Then we have a very sharp pullback exactly into OPEX and try to make a new low. And we go up, and then we go up a bit higher to like 590, maybe even 600. So this would be scenario 1. Then scenario 2 is we actually stay low and try to make new lows going into, let's say, Wednesday, Thursday, something like this. And then we begin our rally, go to the election gap, then hover around here, and eventually start a new leg down. So these are the two scenarios. Basically, depending on how it plays out on Monday, because it could play out both bearish and bullish. We could see the bearish scenario is we go back to the lows and stay there for a couple of days. But if we fail to make new lows, and I think given the amount of deep buying, we will fail to make new lows, uh, we we start another big rally, and this time it will be big in the window between OPEX, like Wednesday, not necessarily OPEX. So starting on Wednesday, Thursday, more likely Thursday, and we go up until April 1st. And in this will be a big rally. I think we go as high as 600. The other one is more like what we saw here. So basically, we have a couple of days of rally, then we pull back again, have a big red day to scare us off, and then we try to make new lows, and then have an even bigger rally afterwards. So I think I don't know exactly which one to pick. Both are plausible, both are actually bullish, and any push down should be deep. It's a deep buying opportunity. So don't be afraid to buy the dip. You saw the amount of money that went back into the market, and what a pushback will just give the people who are stuck in bearish positioning a chance to get out. They will take that chance because they will get scared of the 90 UVOL and the amount of deep buying that is happening. So any pushback lower and attempt to make new lows. So any pushback below 500, 550 is a deep buying opportunity, and expect a bigger rally going into the beginning of April. So yeah, the only question is how does it happen? And the two scenarios are immediate pullback and we start the rally like Wednesday, Thursday, or we continue up, get rejected, go back towards 550, and then again we do a bigger rally post topics. So something like this. Yeah, that's kind of it for now. Nothing really to say beyond this. Still kind of expect a second pullback, another leg down, and new lows after the tariffs kick in on April 2nd. We'll see when we get there. For now, things are bullish even if we do a slight pullback in the short term. Have a good one. Bye bye.